Yeah, I mean, I think you put your finger on it. The two big liabilities that Bitcoin has been struggling against are the fact that it's been trading on a bunch of different unregulated exchanges that could have up to 20x leverage or 100x leverage, and the fact that it was cross collateralized with 19,500 other cryptos. Many of them are unregistered securities, a lot of them are very opaque.
Hey guys, welcome back to the channel. Today we have Michael Saylor on his Bitcoin price prediction once again as he explains the importance of Bitcoin amid the current inflation. He also feels Bitcoin is a better investment than traditional assets such as gold. Michael Saylor explains how Bitcoin plays the role of an inflation hedge that is able to weather the economic downturn caused by the recent inflation. According to the Microstrategy CEO, Bitcoin tends to have outperformed gold even though gold has been considered one of the strongest hedges against inflation in recent years. According to CoinDesk, a US-based trading platform, Bitcoin, the most popular cryptocurrency, went below the psychologically significant level, falling as much as 9% to less than 19,000. Bitcoin was last at this level in November 2020, on its way to its all-time high of around $69,000. Bitcoin has already lost more than 70% of its value since its peak. However, investors see Bitcoin as a tool to combat inflation, albeit individual investors' goals may differ, such as growing their wealth or using it as a store of value. As the exponential rise in Bitcoin prices demonstrates, the value saved in the cryptocurrency has risen faster than inflation. Even in 2021, a down year for Bitcoin, the cryptocurrency increased at 59.8%, well above inflation in most nations. A variety of circumstances, including the crisis in Ukraine, global economic insecurity, and the collapse of the Terra stablecoin, have contributed to increasingly pessimistic feelings concerning Bitcoin. Inflation has been another major factor, with rates surging across the United States and the rest of the world. Because its price in US dollars fluctuates, gold is commonly seen as an inflationary hedge. In recent years, gold has lost its attraction as a hedge. People are less interested in gold throughout the pandemic and even after the waves have receded. It is still seen as adequate for long-term value retention, but in the near term, the metal is regarded as less trustworthy. Bitcoin has performed better than gold and the stock market as an inflation hedge and has a lot of potential for Bitcoin right now, either long or short. Don't forget to comment down below what you think. Hit the like and subscribe button if you enjoy the content we do here on this channel. With no further ado, let's get right through Michael Saylor's Bitcoin price predictions. The perils of investing in cryptocurrencies are well documented. Bitcoin, and to a greater extent the crypto market as a whole, is still seen as a high-risk venture. Nonetheless, the general perception of Bitcoin is that it is somewhere between valuable and useless, a collection of narratives that may not assist an educated investor, especially while inflation continues to dominate headlines. Let's hear what Michael Saylor has to say about that.
Yeah, I mean, I think you put your finger on it. The two big liabilities that Bitcoin has been struggling against are the fact that it's been trading on a bunch of different unregulated exchanges that could have up to 20x leverage or 100x leverage, and the fact that it was cross collateralized with 19,500 other cryptos. Many of them are unregistered securities. A lot of them are very opaque. And so when you have lots of other assets that are being traded on a Saturday afternoon with leverage, that are either they're being lent to buy and sell Bitcoin, or Bitcoin is being pledged to buy or sell these other things with 20x leverage, you're going to get volatility. The industry's maturing right now. And as it matures and it shakes out this leverage, and as we get clarity between what's a commodity and what's a security, and as these exchanges get regulated, I think that the trading leverage disappears and the opacity disappears. And you can already see right now the volatility is decreasing year by year and quarter by quarter in this asset as it matures.
Cryptocurrency is projected to have a strong link with inflation, in the sense that as price pressures heat up, cryptos are likely to heat up even more. This can assist to hedge against inflation by protecting the wealth of investors seeking for assets that can outperform inflationary increases. Real returns from an asset class take inflation into account, and the actual yield must be positive for investors to develop their wealth. Michael Saylor says that holding value in Bitcoin outperforms assets such as gold, real estate, equities, and others. However, Bitcoin as an inflation hedge has its limits and sometimes can be volatile.
With all of this leverage that is currently within the system that is attached to Bitcoin at the moment, isn't that a risk that you need to wipe out the leverage to have adequate price discovery, more legitimate price discovery when it does come to the price of this asset, because it was incredibly overinflated over the course of the last 18 months?
Cryptocurrency is becoming increasingly popular as a payment option, with some large merchants beginning to accept Bitcoin and other similar currencies. Due to the excellent returns provided by these digital currencies, investors have flocked to crypto rather than traditional and alternative assets such as gold.
Yeah, Bitcoin's two things. First of all, it's a non-sovereign store of value asset. So it's like a digital gold, but you can't make any more of it, and you can move it at the speed of light, and you can program it on a computer. And so that makes it interesting to people that would be gold bugs. But it's also an open monetary network. So I can move $1 billion from here to Tokyo and back again every hour. And I can't do that with gold. And so that makes it very interesting to big tech investors. So we actually think in a world where it's very difficult to move physical things around, it's hard to ship things on container ships or fly them around in airplanes, and supply chains are snarled. In that world, what you'd like is a pure block of digital energy that moves on a digital or a big tech network at the speed of light. And so Bitcoin kind of represents the best of both worlds. It's an inflation hedge because you can't make any more of it, and it's a store of value. But it's also a big tech dominant digital network like Google or like Apple or like Facebook. And of course, those have done very well in the past decade.
However, recent volatility in the cryptocurrency market has made many investors nervous. If an asset is to outperform inflation, its performance must be constant. Following last week's carnage, the value of Bitcoin and other cryptocurrencies plummeted by a wide margin, making it impossible to rely on cryptocurrencies while inflationary pressures are high. Every 4 years, the yearly mining rate for Bitcoin falls by half. Given the current supply schedule, Bitcoin's yearly rate of production will be around half that of gold and will continue to fall, making it rare more than gold and driving up its value. As inflation soars to 40-year highs, investors are seeking for any way to reduce the impact on their portfolios. In such cases, investors frequently resort to commodities, particularly gold, which has a long history of serving as an inflation hedge. Some traders have recently promoted Bitcoin and other cryptocurrencies instead of gold as alternative strategies to hedge against inflation. Do you think one is superior to the other? Comment down below and don't forget to like and subscribe.